what I would simply say, and this is what I was putting out earlier, was we have our little roadmaps. We remember when we did the January barometer at the beginning of the year, we are kind of like, oh crap, this year is going to suck horse, you know what? Then we had our sort of typical election year performance, and given who's in control of Washington and what year of their controlling window it is, there's relative performance, and unfortunately we're in the worst one of all of these, which is that blue dotted line. And now we're like coming out of August here, and we just had Mr. Powell say we're taking rates higher, get used to it, and we're good. And he actually even used, which is scary, right? Because he actually even used the direct expression, right? Will cause pain to households. Oh, that does not sound good. Some pain, Jerome Powell says. Like he actually says those terms specifically. That's not good. That's a bad sign. All right. So remember, the corporate interest rate market drives everything. The corporate interest rate market gets above 1.0 spread versus the Fed funds rate, all hell breaks loose. And you see how white that Chair Powell guy is. He wants to keep control of this damn thing. So I guess there is our 1.0 right in that area. I get the impression that they started to lose control. And, really, this is where the Fed sort of said, okay, finally, I guess we better act. You can clearly see that the corporate interest rate market was already puking out. It already started to see the inflation coming, and the Fed it just took so long for these suckers to move. And this is, unfortunately, what sort of triggered that, oh my God, we got runaway inflation problem. So there is the euro dollar market. This is the corporate interest rate market. This is in orange. This is the if the market was just left to its own and you needed to go borrow money, the money lenders down on the usually they stand outside the bus station or the train station in some third world country, right? And if you want to buy local currency, they sit there and swap you local currency. That's what these orange guys are. They're those guys. The blue guys, they're the banks, right? And saying, hey, you know what, let's be adults about this. We don't need to be running around the parking lot chasing after people with big wads of dough. So the point of the matter here is you can see that there's still a pretty healthy spread between the corporate interest rate market and the bankers' interest rate market. So much so, we're not at crisis levels. Notice he isn't like cranking rates up intermarket, but we're pretty damn close. And you can also see that the euro dollar market really hasn't bottomed here yet. It's still making lower lows and lower highs. Does this have to take another leg lower? I'll tell you, if the Fed said, you know what, we're done, we're not going to raise anymore because of some political concerns, whatever. Also, too, keep in mind that these euro dollar guys, they're watching Biden. Biden just let a whole bunch of deadbeat kids off the hook to the tune of $500 billion. So they're not happy about that. So I don't see any bottom in the corporate interest rate market. So this is why, and we can't have this thing above 1.0. You get this damn ratio above 1.0 and serious cracks start to develop and the market starts to lose faith in the actual Fed controlling the system. So I don't think the Fed has any choice. They still must raise rates. They got to bring this relationship back down to the point where we're not even talking about this relationship. I mean, Jesus, for about 20, 25 years, we never talked about the TED spread. Never. Right? And ironically enough, right, you guys are all getting a crash course in the TED spread. You don't want to be talking about the TED spread because the TED spread means that whole inflation bugaboo, the whole system might come crashing down. So we got to stop talking about the TED spread. And that's probably exactly what the banksters are all talking about in Wyoming. Is we got to get these damn publics stop talking about us. We should not be the focal point. The only way to do that is they got to bring this spread in. The corporate interest rate market is doing its thing. And it clearly they're driving the bus right now. So the Fed's got to play catch up and get this spread under control again. And I think to a certain degree, this was sort of the first salvo to try and get control of the market. Probably if you looked at momentum indicators, there was divergence that developed on this push higher, but this might have also been like the market's classic sort of natural, and then we went after the stops kind of thing. And now we've got another top, but you can see if the Fed doesn't raise rates and this silly thing keeps making lower highs and lower lows, you can see a W might form here. And if it does, that's not a good sign, folks. So this is why the Fed had to say and Powell had to say what he said is, I'm going to have to inflict more pain on your lives. You really don't have any choice.